Now, South Africa's central bank has maintained the key policy rate at 8.25% for the second consecutive meeting. That was pretty much in line with many economists' forecasts, and it comes after annual consumer price, the annual CPI rate rose slightly to 4.8% in August from 4.7% in July. Now, the decision to keep rates on hold, however, was not unanimous. Two members of the Monetary Policy Committee actually voted to raise the policy rate by another 0.25%. However, there remains a possibility the MPC might raise rates in its November meeting. In the meantime, the Reserve Bank's gross domestic product outlook pretty much unchanged, with a forecast of 1% growth this year and 1.1% in 2024. All right, then let's bring in Sumitra Naidu. She's joining us live on the program from Johannesburg. So, Sumitra, the job of tackling inflation is not yet done, according to the central bank governor. So is the main risk from the SARB's perspective coming directly from these volatile energy prices that we're seeing all over the place, or are there other factors that he's considering?
Yes, well, Rama, the concerns about oil prices are still there, and the fact that they're rising again is a bigger concern. But yes, there are a number of other factors that the bank is worried about. The local currency, it has weakened significantly against the dollar, 10% year to date. There's also U.S. inflation risks, the Russia-Ukraine conflict. Overall, the global economic outlook remains volatile, with growth expectations rather subdued. If you look on the domestic front, food inflation has eased slightly, but there are still food security concerns. Another outbreak of avian flu here in South Africa, adverse weather conditions. We're heading into a dry season with the onset of El Nino expected, which affects agriculture. And of course, the power crisis. All of these factors are pushing inflation risks to the upside. It's very interesting. The Bank of England governor made the very same comments today, that the work to tackle inflation is not done. The BOE, of course, keeping rates unchanged today, but also warning that there may be more rate hikes to come. Globally, central bankers are still trying to tame inflation, and it's really the core items here that are causing these push pressures, your core items like energy and food. Rama?
So the central bank also, as I understand it, sort of doubled, nearly doubled rather, its growth estimate for this year to around 0.7%. But at the same time, South Africa is still struggling to deal with this electricity supply crisis. Load shedding is far from over. So why has that estimate gone up?
Yeah, so that was an interesting surprise. If you look back at South Africa's GDP growth, also surprising many. We were expecting a technical recession earlier this year, but the economy expanded 0.4% in the first quarter of this year and 0.6% in the second quarter. And when you look at the power shortage, while we're still very much in a crisis, there was also expectations of a very dark winter. We're looking at total blackouts of a week or two. However, we came through winter, of course, with ongoing load shedding, pushing into stages 6 and 8, which I suppose is a reprieve from days on end without power. But these gains have surprised, and these gains have helped the economy somewhat. The governor reflected on this today, noting an improvement in logistics and the sustained reduction in the power cuts, and of course the increase in power from alternative sources. So much of the private sector is also spending billions on alternative energy sources, but they're managing to keep their operations going, and of course all of this just lends to the economy. So that, of course, a surprise coming from the Reserve Bank, expecting much higher growth for this year. Rama?
Indeed, if it was a mark of, the easy money era essentially just ending, the policy rates now is now at a 14-year high. It's eye-wateringly high. But how's that then translated into the levels of non-performing loans that we're seeing in South Africa's big banks? But just as important, credit demand among households and enterprises.
Well, if you look at credit impairments, they're rising steadily, and that's because interest rates are much higher. We're now up 475 basis points. That's significant for people paying back home loans, vehicle finance, credit cards and other loans. But we are also in the midst of a cost of living crisis. So even if you're not paying off debt, the cost of food, transport, utilities have all become so much more expensive in the last year. Making ends meet at the end of the month is so much harder. Most of the big banks are seeing a rise in bad debts. We saw Standard Bank saying its impairments had shot up almost 50%. Nedbank reporting a 13% increase. ABSA reported a 60% jump in credit impairment charges in the last 6 months. Credit demand, though, is lower. People are staying away from taking on new debt. It's also quite tough to get credit in this environment, especially if you can't prove affordability. But you find that people are using their credit cards more, and that those that already have mortgage loans are dipping into that and even extending those loans to gain access to some cash. So credit extension growth moderated to 6.3% in June compared to June this year compared to June last year. So you can see that consumers are really taking strain and the banks are feeling it too. Rama?
All right. Well, one last question for you, Sumitra. The country's biggest poultry producer, Astral Foods, warning of a shortage to come in the months ahead as far as poultry meat is concerned. Tell us more about that.
Yes, so Astral Foods issuing a trading update today warning of a loss in earnings, and that was caused primarily by the power crisis. Astral produces millions of chickens. It owns a number of different chicken brands, but all of these farms around the country have been struggling with the power crisis for a while now. This is not the first time that Astral has actually raised its concerns. Chickens need constant light and heating in order to grow. Now, erratic temperatures are not ideal, and we have seen some horror stories of thousands of chickens dying because the heating went off with the load shedding. Now, avian flu has compounded this problem. This is the third cycle of avian flu in the last year, and this outbreak is believed to be the worst to hit South Africa. There's already a shortage of table eggs in the stores, and Astral is warning that there will soon be a chicken shortage as production will stall due to this bird flu outbreak. It comes at the worst time. Chicken is the most consumed white meat in South Africa. It offers important protein. It's also it's a less expensive meat, but it will be in short supply. So consumers will either get a chicken at demand prices or, of course, much higher, or nothing at all in the coming days.